Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for already Sunday, November 27th. So I was supposed to record this on Friday. I couldn't get to it because of the family obligations. I apologize for the delay. Please don't forget to hit the like button, subscribe to this channel, and share this video. It's a little bit of a bigger video than normally. We'll try to see if there's any correlation. I'm not sure if there's causation between declining support for Putin's war and the possibility of a bear trap for stocks. I'll explain what I mean. I'll do a little bit of self-promotion. I pretty much nailed the price action on the hourly charts. I'll explain how that happened and how can you do the same. Dow Jones has entered a bull market according to my system. We'll look at price action for Russell 2000 and see if there is a way to see, at least in a few months into the future, and see what the action will be like. So far, the high yield bonds is confirming this move higher for stocks. I think interest rates could continue to come down into the year end. We'll look at the oil, and I think it's now doing a bull trap. So I'll explain what that is. We got two things interesting: bear trap and the bull trap. Gold is pulling away from resistance, but is it bottomed? We'll see. Has it bottomed? Oil short sellers were very correct. We traded oil. I'll explain how that happened, and I want to have a public service announcement. This has never happened on this channel, but please stay tuned. So let's do the public service announcement first. I read in Wall Street Journal of all of the publications that Americans are, and I've lived in the United States for over 33 years. My family has escaped from the Soviet Russia as refugees in the late 1980s. So I know exactly what the situation is as far as acclimating to the new country and trying to live in a new country. So I went through this immigrant experience. I went to high school. I went to college here. I worked for many years. So I've done all of the things that Americans are doing. Now we have, if you haven't noticed, we have a war in Ukraine, and United States was able to open they bulldozed it through the red tape, and were able to quickly start accepting refugees from Ukraine. So this is a Wall Street Journal. 85,000 Ukrainians have fled to the United States legally, and what's really cool is that we have many more Americans are already signing up to help further refugees from Ukraine. So I think it's a wonderful thing. Many of my subscribers have wrote to me that they have made good, very big, as one of my subscribers said, astronomical amount of money this year. So I urge those of you who are able to make some money, who are able to help with this, to accept a refugee from Ukraine, and how to do that. This is an actual United States website, Citizenship and Immigration Services. The address is right there. I also have it in my description. There's the address. It's a .gov address, uscis.gov/Ukraine. So you can sign up to become a host for a Ukrainian or family of Ukrainians that are fleeing from just horror that's happening right now in Ukraine, and you can do a big help for the refugees. So please consider signing up. You do need to guarantee their financial support. So this is why the reason I'm saying that if you can afford it, I think it will be a wonderful deed that you will just remember for the rest of your life as a good thing and feel good about it. So if you made some money with my service, please consider signing up for this new initiative. Okay, so let's get to it. waning or decreasing support for Putin's war. As I just said, thousands, if not millions of people have fled this war. So support for Putin's war is waning in Russia. So this is results of, I think, Russian polling center. So this is from the actual Russian public. And notice that in September of this year, 2024, support for war has hit a new low. Notice that at the beginning of the year, when the Russians invaded, the support was enormous. Okay, so let's try to see if there is correlation or is there causation. It's a joke when they say that please don't confuse correlation and causation. Under no circumstances should we do that. However, notice that the support was high for war up until very recently, when it finally cracked to 72%. And the stock market has bottomed exactly when the support for war in Russia has hit a new low, September of this year. And here is that low. Well, we can say that this low was in mid-October, but I think we can also look at September-October period as the, so far we think that this is the bottom. And I wrote here on the new low for Putin's war support in Russia in this September-October area. There is no data for October yet, but I'm sure it's not going to be, high because of the. Because I follow Russian-speaking channels from Ukraine, and a very small percentage of reporting is done in English language in the United States here, compared to what's actually being reported. And I tell you, it is the sheer amount of death that Russian conscripts are experiencing now is staggering. So it is understandable that now the support for war is hitting new lows. All right, so is there an inverse correlation between support for this Ukrainian war and the stock market performance? So far, yes. When the support for war was high, we were dropping from beginning of this year into October. Now the support for war is declining, and now we have stock market rising. Is that a correlation or a causation? Is one causing the other? I don't think it's a causation, but it's a damn good correlation. I'm very happy about this. If there is no war, I would be just super happy. And if on top of that we're gonna see another bull run for stocks, and when I say bull run, I mean we're gonna make new highs and continue higher, and continuously making new highs. Now, it is currently very promising, but at the same time, very treacherous situation in the stock market. So, notice this: we made a low here in October, and what I call a hammer candlestick. So hammer candlestick means there is this green head of the hammer and the white shadow at the bottom as a it just looks like a hammer. So usually those type of hammers indicate, or this type of candlesticks indicate a potential bottom. So we're going to say that maybe this is indeed the bottom of this bear market that started in January of this year, January of this year. We moved higher above this yellow support resistance line. By the way, if you need these lines, the green, blue, red, and yellow lines, this is what my proprietary price action indicators are. You can get them by following the link in the description of this video. So we broke above this, what I call weak resistance. Yellow line is weak resistance. And then came down towards it right there on 3rd of November and 4th of November and retested that level. We have successfully retested that level, rallied a little bit, and then just popped. I mean, we have a big candle right there, Thursday, November 10th. So that's a very good sign for stock bulls. Here I wanted to show this level from 8th of November, the high from 8th of November was where this little white arrow is. Now the price never came down to it, and I wanted to show you the hourly charts of what I sent to my subscribers. So my subscribers got this chart just to kind of understand, sometimes I give a very detailed chart to my subscribers so that they can make a decision of what to do. So there's that surge that happened on November 10th, and there's the November 15th high right there where I'm hovering. And so on this date right there, November 16th, the chart looked like that at the moment. Okay, like that. And I'm like, okay, I want to know what's going to happen in the future. I want to predict the future. So what I did is I have what's called a ghost feed. It's called a ghost feed. So you can find it here in the, let me see, where is it? One of the features here, it's basically just, it paints various candlesticks just into the future. I can't seem to find it right now. Anyways, so there is a feature here where you can use it. And so this is what I did, is I predicted that we're going to retest this blue support resistance line. Now remember, this is an hourly chart, so each candlestick is 1 hour's worth of activity. It's very small. These are futures for S&P 500 or a contract for difference. So contract for difference is actually live chart. SPX 500 USD is the symbol on TradingView. So right there on November 16th, I said, you can see this predicted one is in purple. So this is what I predicted at the time was going to happen. I thought we were going to retest this level at 3857, which was where I just showed it. This was the high from November 8th. I thought we were going to retest it. We didn't. So we did do what I said as far as touching this blue support resistance line, and basically we rallied off of it and continued higher. So notice that we pretty much followed I pretty much nailed it as far as where the price will be on November 23rd, right there. So right now we're actually slightly higher, and now we're coming up towards this. If we look on daily chart, we're actually above this. We're very close to this high from Tuesday, November 15th. But if we look on S&P 500 ETF SPY, we actually closed above that level. So we closed above Tuesday, November 15th level on yesterday and today. I'm sorry, the day before on Wednesday 23rd and on Friday 25th. There was no trading on the 24th because of the Thanksgiving holiday. So what I'm asking right now is, we have a bearish signal. We technically are still in a downtrend. S&P 500 is still technically in a downtrend. The downtrend started where I'm hovering right there, April 29th, 2022, according to my system, when the stock S&P 500 has closed below this yellow line. We had a couple of several opportunities to sell short with the downward facing arrows that were successful. However, what I'm trying to point out right now is this a bear trap. So we have a signal right there on Monday, 14th of November, that technically worked before. Notice there was great opportunities, for example, here in September and before that in August, to do exactly the same thing, sell around the red line, and we should be doing it, but I'm looking a little bit beyond that, and I'm like, I'm not sure I want to be selling now. So bear trap. So what a bear trap could be, this could be a bear trap, because people like myself who follow the algorithm say, okay, yeah, we got the signal, let's sell. So they would sell right here, but then the price would actually continue higher. And bull market or new beginning of a new uptrend is not that far off. It's at the blue line at 4318. We're just a few percentage points away from new bull market. I think if we close above this 4318 level, we'll make new highs. We'll continue higher, not necessarily immediately, but eventually we'll make new highs. However, if we roll over here, we might actually start making new lows. So my thinking is, and this is the reason why I'm saying it's still a treacherous time, is because the algorithms say sell or sell short, while if we look at the chart and we look at the price action and we look at the global and potential geopolitical events, we're like, maybe this is a bear trap. Maybe we should just wait and do nothing, or potentially wait. Maybe we're gonna have a breakout into the bull market. So this is another reason why I am cautioning my subscribers against taking too big positions either way. But I would be extra cautious right now on shorting the stock market. Dow Jones, here's YM, one exclamation point, finally has broken out into a new bull market. Right there where I'm hovering on November 18th, I believe, right there, or definitely on November 22nd. We're now in a new bull market, meaning that we have closed above this blue support resistance line and have not yet closed below this yellow support resistance line. Notice last time Dow Jones was rejected right there on August 16th and 17th, and rolled over with vengeance to make new 52-week close. Now, what it is possible, we're seeing a V-shaped recovery. So V, like V for victory. Nasdaq is still dragging its feet, but overall, because of the way the correlations work, because of the correlations between the various stock indices, Nasdaq should continue higher if the rest of the markets continue higher. So I don't see a reason for Nasdaq not to continue higher. Yes, currently it is underperforming. That doesn't mean it will continue to underperform in the future. And finally, I wanted to give a little bit of potential price action into the future. So this is Russell 2000, and I have an offset from my indicators. So we're currently looking at an offset indicators. We're offsetting them a few months into the future. And notice what's happening here. So January 17th is the lowest point of this blue support resistance line, and the blue support resistance line is where we want to be buying. We want to be this is a new bull market, new uptrend. So we're actually very close to it, and we're like, we're basically 4.5% away from it. So I'm thinking potentially we'll get I can find that tool, ghost feed. Where would it be? If I could find the tool, I'll do the ghost feed for you, but I just can't seem to locate it right this instant. There it is, found it. Okay, so something like this possibly. And then, like that. So I'm thinking that we're gonna see something of this nature into January, February. Now, this is, again, inflection points are dangerous for multiple reasons, and now we have a literally a rat, cornered rat. Putin is a cornered rat, and they sometimes do crazy things. So, as they say, the final argument of kings. So what is the final argument of kings? It's I believe it was French kings had it on their cannons during the when they were still kings, obviously. So the final argument of kings is a cannon. Now, currently, we don't have kings, but we have presidents, or in this case, dictators. So The final argument of kings would be nuclear weapons currently. So is nuclear weapon going to be used? If it's going to be used, it's going to be a very obviously just a tragic event, and could additionally it could lead to, first of all, global nuclear war, but hopefully not. But if the nuclear weapon is used, it could be used right around this time. I don't know why, but January 17th, or this time in January, looks ripe, because the conditions would be so bad for Putin that he could like snap and use a weapon. So this is a optimistic scenario right there, and then we can do a pessimistic scenario. We can do a different color. I'm gonna do it a different color maybe, and then instead of a breakout, we're gonna get a collapse. So obviously we don't know if it's gonna happen, but it's not impossible. So we're gonna see some sort of a big decision is coming very soon, in mid-January to early February. So again, I wish I could tell you more, but obviously you can see that this is a prediction of price action, and it's impossible to do, but I'm giving you an idea of how to think about this. So I would be watching this super closely. If the popularity of dictator Putin continues lower, we could see a very bullish scenario. We can see a very happy scenario. However, he can also snap and do something crazy, like use a nuclear weapon. All right, let's continue on. High yield bonds or junk debt so far also seem to have bottomed here in October of last year, and kind of rising. Important thing is we have broken above previous highs on November 22nd. So we had a high here from November 15th, another high from October 28th, and finally we are breaking above it. So this is actually a good sign. And the way high yield bonds and stocks normally move together, and in other words they correlate highly. So I'm hoping that the move higher for junk debt also will translate in continuation of the move higher for stocks. Looking at treasury bonds, this is a TLT 20 plus year treasury bond fund. In October of this year, I pointed out that we have this potential exhaustion gap. We did indeed have an exhaustion gap right there in October 22nd. Exhaustion gaps is where I'm going to zoom in right there. So from October 20th till October 21st, we gapped down, but it was a gap down after a very large move, and those gap downs after large moves usually indicate some sort of an end. So that's why they call it an exhaustion gap. And so I think this is what happened. Now we're moving back up. Notice we moved just to this yellow support resistance line. If we look at the rates, TYX, so 30-year treasury bond yield, it's doing the opposite. So it topped out here in October and now broke below this green support resistance line Wednesday 15th or rather 16th of November, and I think it will continue lower. So I think the rates will continue to come down into the end of the year at least, and then we'll see what happens when or if we get to this blue support resistance line for TYX for a 30-year treasury yield, which is currently at 3.39. So that's a crucial level to watch. It's not impossible for it to continue lower and for the interest rates to kind of stabilize with no longer be rising, despite what's happening with Federal Reserve. So we'll see again what's happening. But I think interest rates will be coming down at least into this end of December. Dollar index, DXY. So very briefly, dollar index on the weekly charts. Each candlestick is a 1 week's worth of activity. I predicted this move back in July of 2021. It had a huge, enormous move for the dollar. I think we have indeed topped out. Here is a candlestick on a weekly chart from Monday, the 26th of September. Big drop eventually. So this week, notice what's happening. We broke this blue support resistance line, tried to rally above it, but failed. If you're trading with my charts, if you're trading using my indicators on weekly chart, change the length to 52. So going back to the daily chart, notice what's happening. So again, the algorithm, the robot, this is the algorithm. We're in a bull market, so we have to be buying on close above the blue line. We have a low or a close below the blue line. So let me show you where that is. So we made a new low or a new close below this blue support resistance line on Friday, the 11th of November of this year. And then we made a close above this blue support resistance line on Monday, the 21st of November. Okay, so the algorithm should be buying here. However, I was looking, I'm trying to analyze it because I'm not just an algorithm. I have some opinions, and I think we have topped out. So we have been making new lows. We have been breaking support. We have quite a bit of bearish candlesticks. So this latest potential opportunity to buy, I think, may be indeed a bull trap. So in other words, if you buy here with the hope of making new highs, it might turn around on you, and I think it is actually already happening. So let's look at gold XAU divided by USD. Since we just looked at dollar is dropping, so XAU divided by USD, so the lower part of this equation is getting smaller. In other words, gold is getting more expensive. So inverse relationship for dollar is a normal type of relationship. There's a possibility we have bottomed on November 3rd here and moved higher. Now price has touched the resistance at the red line. Notice there 16th of November. So when we're in a downtrend, we need to look for resistance and sell at resistance. This is exactly what happened a few weeks ago in June, a few months ago in June here, and we sold at resistance. Notice the downward facing arrows, down, and then we went down quite pretty, nicely. Now we're reversing, and I'm watching these levels very carefully, especially if we break above 1785. I'm reading it right off the chart. This is an important level to watch. If we break above that level, the door will be open towards bullish levels, which are actually almost at 1900. So if we close above 1900, I think we'll start making 52-week highs. And finally, very briefly, oil. So CL1 exclamation point is the continuous oil futures. So notice the downward facing arrows. We were selling it short. We were shorting oil. Latest opportunity to sell short oil right there on 9th of November was very successful with a over 12% run to the downside. If you're trading options, let's say you bought puts on USO, it's easily 3 times more, possibly even more, depending on how far your expiration of the options were. So congratulations to subscribers. Once again, please, if you made some money, if you feel this is actually a very good thing to do, consider hosting a Ukrainian refugee. You can register at the website where I'm hovering, uscis.gov/Ukraine/Ukraine. You can also read about this in the Wall Street Journal. And that's it for this week's recap. Please let me know if you have any questions. Also, don't forget to visit my site. You can find information on my site in the description of this video. It's MasterChartsTrading.com. click on sign up for one of my services. If you have any questions, please send me a message. Thank you for watching. Have another great trading week. Bye bye.